Well, the Nifty has sneaked itself into the green as we speak, but as promised, let's get chatting with the management of HOEC. We have Mr. Elango, who joins us on the show right now. Hi, Mr. Elango. Thanks so much for joining in, sir. I was just looking at some of your announcements that you've made, and you've indicated that you have suspended production at one of your fields. If you could give us some clarity, the suspended part contributes to how much of your total volumes or the total amount of your capacities? And is the other part of your capacities functioning as per normal?
Yes, the suspended field is PY1 offshore field, which is in Tamil Nadu, East Coast in Tamil Nadu offshore field. That contributes about 10% of our net production of gas and about 15% of our net revenue. Our main production comes from Dirok field that contributes roughly 80%. That field is producing normally, as well as our other two producing fields, which is both in Karsang in Northeast, as well as Cambay marginal fields in Gujarat. All other fields are functioning in normal mode. We had to temporarily shut down the PY1 offshore field and due to the current situation.
So, Mr. Elango, if you could give us a sense of if you have any outlook on when you could open this facility, and at the same time, is there a risk that any other of your facility would perhaps have to be shut as well?
No, overall, if you really look at the states where the pandemic has had a larger impact, fortunately in the Northeast, we are seeing the impact is minimum. Therefore, particularly in the district that we are operating, which is Tinsukia district, is functioning quite normally. Therefore, our productions are continuing during the lockdown without much impact. And over a period of time, we have seen from April to June, the volumes have picked up further only, as far as Northeast is concerned. Gujarat, cities in Gujarat had some problems, but a field we've been able to operate without much difficulty. In Tamil Nadu, where we operate a large offshore field, we employ about 30 people in our facility, in our onshore facility, and they have to visit offshore as and when required. We had reduced the number of people, keeping the safety aspect in mind. But when we saw the situation going up in terms of number of cases in the region, including a couple of our employees, then we thought it is safer to temporarily shut down the production. So what we plan to do is we are working on a plan to select a core team to stay permanently in the field for a period of 28 days and avoid the external contact, absolutely nil external contact, by ensuring all essentials are provided when we reopen. So we are working on a plan. Hopefully, over the next 2 weeks, we should be able to execute the plan. But obviously, we will see how the situation in the villages around develops and take a call. Our aim would be to restore the production by end of this month. But that is after we fully satisfy ourselves that it is safe to reopen and operate the facilities.
All right, Mr. Elango, then assuming that you can start that production by the end of this month, what kind of a volume number are you looking at for FY21? And if you compare it with FY20, how much lower will it be? And also, I wanted to understand what's your mix right now in terms of gas as well as oil. I think it was, it was more towards gas, and then I think the dependence was reducing out there. You can give us the updated number, sir.
Correct. Overall, we produce about 85% of our production is gas, and balance 15% is liquid, which consists of both condensate and crude oil. This mix will change to 65% gas and 35% oil once we bring the B80 field, which we have recently announced after completing a 2-well drilling campaign. In fact, we continued the drilling during the lockdown period and announced the development in B80. That field is expected to produce about 8,000 barrels of oil equivalent, effective hopefully by end of this year. So our mix of oil and gas will change to 65% gas and 35 to 40% oil once we bring B80 productions. As far as the outlook for the current year, we have updated the market that until the new production comes from B80, which can be really counted only from FY22 for a full year basis, though our target will be to start the production by Q4 of this year, it is expected to be around the same level as last year, which was about 8,000 barrels of oil equivalent gross production.
All right, Mr. Elango, final question from my end then. If your volumes are likely to be the same as last year, if you could give us a sense of how your revenue will be, because the realizations for both oil and gas, I presume, would be coming down, right? How have realizations been in this quarter so far? How do you expect them to be? How and what do they compare with in the previous quarters?
Obviously, I cannot really disclose about this quarter. We have not announced the results on this quarter.
Okay.
But overall, you're right. The prices of both oil as well as gas prices have come down. Earlier, we were operating, the prevailing gas price was about $3.3 per MMBTU. Now it's about $2.38 per MMBTU. That's about $1 down. But what we are hearing is government is likely to completely announce a free market pricing for all the gas produced in the country. That's what we are hearing from the media. And we know there are some committees who have been contributed to look at some fiscal concession as well as freeing the gas price model for the country as a whole. We are hoping that comes through, in which case we will have market-determined gas prices that will provide. Until then, we'll have to continue with this $2.38 gas price. Oil price, as you know, has moved up slightly from a very low level to about 40 odd. Our break-even prices are significantly low, though the margin will be lower compared to last year, but we would be generating surplus.
Right. All right, very quickly, Mr. Elango, what is the cash in the books and what is the capex for this year?
So we've got about 150 crores cash in the book, and we've got a plan for about $15 million capex for this year.
Okay, all right, Mr. Elango. Thanks so much, sir, for stopping by and giving us all these details. Hopefully, production returns to normalcy by the end of this month, and in fact, you go ahead and achieve what you had achieved in the last year, as you just told us. Well, on that note, though, we'll slip into a short break. You come back, we'll turn our attention to a few stocks that are moving around. Stay with us.